Welcome to your National Housing Market Update for November 2025. If you're a buyer, seller, or investor, today's data is crucial. So let's dive right in. As of November 2025, the US housing market remains in flux, shaped by fluctuating interest rates, inventory challenges, and shifting buyer demand. Let's break down the latest numbers. First up, the average price of a home sold nationwide stands at $410,000. That's a slight dip of 2% from November 2024, reflecting the cooling of what was once a red-hot market. Interest rates, however, continue to play a pivotal role. The average 30-year fixed mortgage rate has risen to 7.5% this month. A sharp increase compared to last year, forcing many prospective buyers to reconsider their options or delay their home buying plans altogether. While some regions are seeing modest price increases, areas like San Francisco and New York City have experienced declines in prices, largely due to the affordability crunch driven by higher mortgage rates. Now, let's look at the total number of homes sold. In November 2025, just 420,000 homes were sold, down from 475,000 in November 2024. That's an 11% decrease, reflecting the ongoing market slowdown. On the flip side, the median home price across the nation sits at $350,000, almost unchanged from last year. While the median price remains steady, the broader market is seeing shifting dynamics. Buyers are becoming more selective, and sellers are adjusting expectations. New construction is also a key factor. This November, there were 40,000 new homes sold, marking a slight increase of 3% compared to last year. Builders are ramping up supply in response to persistent demand, especially in suburban areas where space is more abundant. So what's next for the housing market as we head into 2026? Will interest rates continue to rise? Will more buyers enter the market as inflation slows? Only time will tell, but the trend lines suggest continued volatility, which could mean more opportunities for savvy investors. Want to stay ahead of the curve in real estate? Make sure you subscribe for more updates and hit the notification bell so you don't miss out on critical market shifts. Until next time, stay informed, stay ahead.
Hold the phone. Is the Great American Housing Freeze finally starting to thaw? November's numbers are in, and what we're seeing might just surprise you. Let's get straight to the biggest obstacle, the cost of borrowing. As of late November 2025, the national average for a 30-year fixed mortgage is hovering around the 6.34% to $6.40 mark. This is a critical factor. Lower rates in recent months have pulled some buyers back from the sidelines, but this rate still maintains an affordability pressure cooker across the country. Now for prices. The national median price for existing homes in October, the latest full data, came in at a formidable $415,200. That's up 2.1% year over year. But here's the puzzle. The average new home price saw a sharper rise, hitting $534,100 in the August data. However, regional disparities are huge. While the Northeast and Midwest see steady growth, certain Sunbelt metros in the South and West are seeing the steepest price declines. Shifting to volume, and this is where the market's resilience is on display. Existing home sales in October saw a modest 1.2% increase month over month to an annual rate of 4.10 million. More importantly, this is a 1.7% increase compared to October of last year. Yes, total homes sold is still historically low, but the recent trend is one of slow recovery, suggesting that even at these elevated prices and rates, motivated buyers are adapting and closing deals. A key driver of this shift is new construction. New home sales, which are reported less frequently, surged to a seasonally adjusted annual rate of 800,000 this past August. The supply is catching up, and this is easing the inventory crunch. Total housing inventory in October was up almost 11% from last year, giving buyers a bit more breathing room and negotiation power. This new inventory is vital for balancing the market. So, what does November's market data tell us? It tells us the frenzied growth is over. The price picture is mixed, with national figures holding steady, but regional drops becoming more common. The market isn't collapsing, but it is normalizing. We expect to see continued slow growth and a gradual improvement in affordability, largely driven by new inventory and, hopefully, a continuation of lower mortgage rates into the new year. Whether you're a buyer, seller, or investor, localized data is key. Don't let national headlines confuse your local strategy. Click the link in the description for a personalized market analysis for your city. And for the very latest updates, subscribe and hit that notification bell.
Your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.